when demand concerns hit the markets, that just exacerbates the supply concerns because then, resources don't go towards increasing the supply.
Absolutely. You see it not only in oil, but pretty much across the commodity complex. Given a combination of poor returns over the course of the last several years, plus ESG, investors were wary of oil and commodities to begin with. Then you add this volatility, and we saw this type of volatility around the Delta variant back in July, and then once again right around Thanksgiving with the Omicron variant. A lot of investors said we've had enough with this space at a time that it needs capital more than ever. And so what we're seeing is a lack of capital to be able to grow the supply base, particularly when we look out into next year, when it's all likelihood OPEC spare capacity will be exhausted. The likelihood of an Iranian deal is declining, and we have yet to see any significant shale drilling. So this market starts to look pretty tight into 2022, which creates a lot more upside risk, particularly given where the forward prices and even the spot prices are today.
And you look at how the odds are stacked is what I'm trying to get to. You look at how the odds are stacked with Omicron, and we're hoping for the best, that they're mild cases. Then we've also got these therapeutics that we were just talking about. You may get a fourth shot. The Omicron might not be like Delta in terms of just spreading everywhere. So that could go away, and you're still left with this supply issue. And you've got those therapeutics that are coming in maybe 3 months, 6 months. So it just seems like this is really temporary, any demand concern. So are you looking for sharply higher commodity prices, oil as well?
Well, I mean, the one factor here, the big story in oil was the vol market. You look at positioning in flat price that's directional, it had already come off tremendously. Where all the positioning was in the vol positions. You also saw that in the equity market. And when Omicron hit and brought oil prices down, at least on the forward basis in calendar 22, down to around $65 a barrel, you started to get into that strike zone. The dealers had to sell and sell and sell to cover their positions, which is why it was so violent to the upside. That's what we call a negative gamma effect. And that brought you all the way down. And then immediately, as soon as things started to stabilize, and as you pointed out, people realized, oh, Omicron is not nearly as bad as we thought. You started moving back up to those strikes, and that buying, whipsawed you back up to 75. We still have more upside risk associated with this negative gamma effect. But I think one thing that's apparent going into year end, just given the volatility, is that risk is going to be slow to come back into this space. We don't think until after the first of the year that you start to get a lot of risk ready to put positions on. They get a clean slate after January 1st. At that point is when we think you get the real upside back towards $90 a barrel.